And good morning and welcome back. Thank you for joining the BACP Small Business Remote Expo. My name is Stella Natufe with the Chicago Department of Business Affairs and Consumer Protection, otherwise known as BACP. Before we get started, I want to provide some information. This webinar offers closed captioning. To enable closed captioning, click on the live transcript button on the bottom of your screen and choose your preferred method. We would like to encourage all attendees to ask questions. Please use the chat box on the right side of your screen to send your questions. There will be a Q&A session at the end of this presentation. And now let's get started. Path to Finance Your Business webinar. Please welcome our panelists from Allies for Community Business, the U.S. Small Business Administration, and Summercore. Good morning, everyone. Thanks for joining.
Good morning.
Good
Glad
morning.
to be here.
Morning.
Okay, our first question is for each panelist. Can you tell us about your organization, yourself, and your available financial programs that you offer?
Okay, did you want in any particular order to start?
Let's start with the SBA. Everyone loves the SBA.
Okay. My name's Bob Esquivel. Again, I've been with the agency for 34 years. Actually, it'll be 35 in September. So I've been around quite a bit. And everybody asks, what is we get it confused, it's the Small Business Association, and we're not. We're the Small Business Administration, which is a small federal agency that was started back in 1953 for the sole purpose of helping out small businesses. We just got over a crazy period of time during our COVID period where we did a lot as far as COVID loan programs, and that did have grants involved also. And those COVID loan programs were PPP, Restaurant Revitalization Program, our Economic Injury Disaster Loan Programs, among a few others. So that's over. We're hoping we're getting back into our regular scheme of things. Again, it's the SBA. Our sole purpose is to help out small businesses. And we basically focus on three areas. And those are as far as with counseling, contracts, and what I'm going to talk about today is capital access. So those are three main areas. So what do we do as far as with counseling? We do a lot in regards to counseling through our resource partners, which are partially funded by the SBA. Those resource partners come in the form of small business development centers, which we're partnership with DCEO, Department of Commerce and Economic Opportunity, and also through SCORE and through the Women's Business Development Centers. And of course, we also use our local Chamber of Commerce's to help through our Community Advantage loan programs, Community Navigator, programs. So we have a host of information for and available resources for small businesses through our resource partners. In addition to that, as far as contract, we want to make sure that contracts are available to our small businesses. So through our contract program, we pretty much help coach them through the process to bid for contracts. We don't actually have the contracts available for them, but we help them through the bidding process. We know that that's a very important thing since the United States government awards over $500 billion worth of contracts each year. So that's a niche and it's an area that we want to make sure small businesses have a part of, which is typically around 23% of those contracts that are awarded are geared towards small businesses. So our loan programs, though, is something that I really want to talk about. Is what we do. And our loan programs that we have, we start off with our 7 loan program, which is a guarantee loan program. So it's not a direct loan program. That's important to know. And the reason why the guarantee loan program works is because we add that guarantee reduces the risk to the lender, which adds flexibility to their lending policy, specifically in the areas of collateral. So we won't turn down a loan if there's deficiency in either quantity or quality of the collateral itself, as long as everything that is available is being offered. The other area, and that's probably, I should say, that's probably the number one area why the lenders use the guarantee. The second is as far as startup businesses. It's the risk for a lender is with no history on a small business is great. So for that reason, the guarantee will help mitigate that risk. So lenders will use the SBA guarantee for startup businesses. And the third, probably most popular reason is for longer terms. Again, the risk factor for a small business that's out there for a while is great for lenders. So therefore, with the guarantee to help mitigate that risk, they're willing to take a look at longer terms. And we go up to 25 years for real estate purposes and 10 years for working capital and equipment purposes. And now under our umbrella of 7A loan program, we have our delegated loan, PLP, and express loan programs, our community advantage loan programs, our international trade loan programs, and our cap line programs. And under the cap line program, there's one I want to talk about real quick about is our contract line credit program. So those who are looking for contracts, this is a program that's geared towards using the contract itself, as long as it is an assignable contract for the collateral part of this as far as cap line program. So in addition to our main umbrella 7A, we also have our 504 loan program, which is for me one of the best loan programs out there for commercial real estate. So businesses are looking for commercial real estate. It's an excellent loan program because it offers an opportunity for a small business to only put 10% down on a commercial real estate property and get terms of up to 20 or 25 years, and it's fixed for that duration. And as far as the interest rate on there, it's pretty much what I usually call like a Wall Street type of interest, which is very low considering as far as what's out there for other commercial loans. So that's an excellent loan program. And then we have, I won't talk too much about it because Allies and Community Businesses here, but they are great partners of ours for our microloan program. And we use that loan program for as far as businesses looking for loans of $50,000 and under. That's the SBA portion part of it. Allies Community Businesses, SBA microloans, as well as other microloan programs that I'm sure Mary will talk about. And of course, our 504 loan program, as I mentioned, is a great loan program. And I probably should have said too much about it since Kim from our Summer Corps partner is here also. So both of those are non-for-profit organizations and intermediaries that are partnered with SBA and licensed and approved to do those particular programs that they're in charge of. I'll stop there and can let the other presenters talk a little bit about themselves and their programs.
Thank you, Robert. Kimberly, tell us about yourself and your organization. Thank you.
Sure. Hello, my name is Kim Brisky. I'm the Director of Communications at Summer Corps. We are a nonprofit lender certified by the SBA. As Bob said, our main product that we work on with the SBA is the SBA 504 program for the building, renovation, and refinance of commercial real estate and heavy equipment. I'm happy to talk a little bit more about that if there are specific questions. But I would also say that I'm here kind of with a different hat on as well. And it's great to kind of think of Summer Corps as being able to help with commercial real estate and just more permanent building improvements, because we also operate as the administrator of two programs on behalf of the City of Chicago Department of Planning and Development. That's going to be the Small Business Improvement Fund, also known as SPIF, as well as the Neighborhood Opportunity Fund, known as NOF. And the great thing about these programs is that they are grant programs. Now, to note, they are reimbursement grant programs, meaning that you will have to be able to provide some capital upfront to participate, but we have a lot of ways to try to help you be able to participate in this program. And then at the end of the day, you will be able to be reimbursed for the work that you did that was approved. So the cool thing also about SPIF and NOF is that they really are targeted for neighborhoods to really build up these commercial corridors and to make them vibrant and really are not only a benefit for the actual individual business owner, but also for the neighborhood as well. And so I'm happy to kind of dig in a little bit to that as we go forward. Thank you so much.
Thank you, Kimberly. Mary?
Good morning, everyone. I am Mary Tritzis, the Senior Director of our Community Lending Team here at Allies for Community Business, also known as A4CB. I came to Allies in 2019, and prior coming to Allies, I was a 30-year former banker working for two different local Chicago regional banks. Born and raised in the city on the far north side. A little bit about A4CB. We have actually been here since 1994 in the west side of Chicago. Allies does three things. We provide capital in the terms of loans and grants. We provide coaching, free business coaching to any business in the state of Illinois and Indiana. You do not have to be a lending client with us. And we provide connections. Similar, thank you, Bob, for giving us a shout out. Our strong partnerships and our connections with the SBA and Summer Corps and many other organizations for entrepreneurs to grow great businesses that will create jobs and wealth in their communities. We are a micro lender and we are a CDFI. So a CDFI is a community development financial institution. A little bit different from a bank. So a bank is considered an FI and a financial institution. A CDFI allows for us as a lender to provide alternative lending solutions for underserved small businesses. In the last 3 years with the pandemic, we helped 56,000 businesses and dispersed over $700 million in loans and grants. And so we have been working with the city of Chicago on many of the grant programs during the pandemic in the state of Illinois. And we are also a regional, which I'm probably you talked about earlier today. We are one of the 8 regional licensing business centers for the city of Chicago. What we do is our loans start as low as $500 up to $100,000. And we provide both and offer a term loan and a line of credit that I will get into later on the specifics. However, we offer startup lending and we also work with clients that have ITINs. We have no minimum credit score and we do not take personal collateral. The only thing we do is a UCC filing. And our average loan size is actually $15,000. So we are working with the true startup and small business that may be looking for working capital or equipment loans. Our average time frame to close a loan from application that only takes 10 minutes and you just need a driver's license to the end is about 12 days. So we always say when banks say no, which are many banking partners that we have, when they say no, come to Allies because we try to help clients avoid the predatory lending with high interest rates, as our interest rate is a flat 9%. Thank you.
Thank you so much, Kimberly. Let's get to our next question. Mary. Mary, this question is for you. What advice or tips do you have for entrepreneurs who are looking to gain access to grants to help start or improve their business instead of using a loan?
So I always say, if you could go for the free money, go for the free money first. There are many grant programs available on our website at a4cb.org. We actually have a grant page that we update every day. We are currently featuring the Summer Corps grant program with the BACP. And as more grant programs become available, please always look at our website. Another thing small businesses should really be thinking about is what is going to be the purpose of what you need your funding for and what is going to be your use. So the purposes and use of what you need your funding for is really important. And as I had mentioned, we have 4 expert business coaches at Allies for Community Business. So if you are looking for funding and you are trying to seek some grant money and perhaps you can't find alternatives, make an appointment. Everything is done online, or we also offer office hours. We are located here at the Hatchery in East Garfield Park, but you can meet with one of our business coaches. Again, they are free, so they could work with you on many of the different programs. For another thing that Allies for Community Business does, for instance, is we have partnerships. One of them is the Tory Burch Foundation. So if you are a 100% female-owned business, the Tory Burch Foundation has provided to us some grant dollars to reduce your interest rate if you can't find a full grant and you need to take a loan. So there's many alternatives, and there's many different avenues. You have to do a little bit of the research. But again, I always talk about our free business coaching program because they are available to help answer and help navigate for whatever uses and purpose you need for that specific loan.
Thank you so much. Kim, this question is for you. When applying for a business loan, would it be best to apply for the loan using your personal or business credit?
Thanks for the question. And I did want to add on one thing to Mary's answer as well, is that in terms of applying for the grants that SummerCore offers, and really any grant, it's always really important to have your key documentation ready and on hand. I think a lot of folks maybe were not ready to apply for grants when COVID hit. And, the things that we would be looking for are business license, personal finance statements, or tax returns, business plans, things like that. So always making sure you have your key documents available and updated is really important. So now shifting back to the question you asked about business versus personal, I kind of want to take just a minute to talk a little bit about the two different types of credit, and then we can swing back to the original question. So when we're talking about your personal credit, that's going to be something it's really shaped by your payment habits, your credit card usage, and it's tied to your individual social security number. And you can get your credit report from places like Equifax, Experian, TransUnion. For business credit, it's similar-ish that it's looking at your payment habits, credit card usage, but it also can include your relationship with vendors or other historical data that might be in public information, your business size, perhaps like the industry that you're in, payment performance, things like that. So that's sort of the key difference between. Additionally, a business credit is linked to an EIN number that's issued by the IRS. So you do actually have to purposefully apply to have one of those. Additionally, if you're looking for a business credit report, some of the traditional personal credit reporting agencies do offer it, but also a lot of them use Dun and Bradstreet, so D&B. So there are a couple of different ways you can do that. Some people might ask, why would you even establish business credit? And as a lender, a good credit history can make it easier for the lenders to feel comfortable with financing major purchases like new equipment or real estate, with better terms and rates, without needing you to have a lot of equity injection or a lot of cash on hand. And it really does make it more attractive for a potential business partner as well as for a lender. So as I mentioned before, if you want to establish business credit, you need to be able to actually get the EIN and through the IRS. And to help build it, it's going to be things like a business credit card, or actually having a credit account with some of your vendors or suppliers. The key is also going to be making sure anybody who you work with as a lender or a vendor actually is reporting your credit history so that actually can start to build up. So back to the original question, which is, do you apply for the loan with your personal or business credit? To be honest, especially in the case of the 504, it's not really a question of what is best. It's a question of what does the lender require for a specific financial product. You do not get to dictate generally what a lender is going to look at. For the SBA 504 loan, that's our premier loan product. They don't get to choose. The borrower doesn't get to choose where the credit history we pull. And actually for us at SummerCore, we look at both. And it's important because it gives a really good complete picture of the borrower. For example, if a business credit history looks great, but the owner's personal credit is poor, we're going to have questions about that and want to make sure that the business owner is going to have the ability to manage the finances of the business. And let's say if a borrower isn't paying a personal auto loan, that would be, something that's another red flag. But if they're able to say, it's because there's a personal illness or some type of family emergency that's going on as a reason why the person's credit is low, we take that into consideration. So it's a very holistic look, at least how we operate. And I would say that if you're wondering if your personal credit is important when it comes to business lending, the answer is absolutely. So do make sure that you if you do decide to also build up business credit, do not ignore what's going on with your personal credit.
Thank you. This question is for Robert and Patrick. Do I need a business plan when I apply for a loan?
Thank you. Real quick though, if I can, Pat, if you're on, if you want to introduce yourself.
Well, I'd be happy to. My name is Pat Pierkowski. I worked for Bob here at the SBA. Prior to joining the SBA, I was a commercial lender at several Chicago banks for 30 plus years. I'm a lender relations specialist, and as such, I work with the lenders that are active in our program. Again, as Bob said, we don't direct loan, we guarantee their loans, and the banks are making the loans. And it's probably 200, a little over 200 plus banks in Illinois that have agreements with us. Some are more active than others. Some use the program a bit differently. Some want, their average loan size is less than $100,000. Some, they only do loans over $1 million. So it's, you need to do your homework. We start where the banks end, meaning we have a no credit elsewhere test. And as part of that process, the banks, when they apply for our guarantee, need to certify that they will not do the loan without our guarantee. So in any given year, we roughly guarantee 60,000 plus loans across the nation. Those are 60,000 loans that theoretically would not have been made without the SBA guarantee. So that's my introduction.
Thanks, Pat.
And a
Now
business
back
plan.
to the question. Okay.
Yeah, our small business network, there's 40 plus small business development centers across the state. Will assist on startup business plans or business plans in general. When I was a lender, especially a startup, critical, you need a business plan that's well thought through and supported by a lot of all the assumptions about success factors, like maybe car counts for a retail business. But even a business that's been around several years, the ones that I've seen that are the most successful use a business plan as like a growing tool. They always have one. And every year they're updating it and refining it based on their experiences during the current year. And if you're approaching a commercial lender, whether you're just startup and you haven't even, the business isn't even open yet, or you've been around for 10 years, a lender is going to want to see a business plan so they can get a basic understanding of what your business does and a basic understanding of what you know about your business and what you may not know about your business. So that'd be my response. I'll defer to Bob now.
Yes. So I agree with what Pat said as far as the need and who can help as far as preparing a business plan. And the question really says, do I need a business plan? In some cases where you have historical records to show you've been in business for a long time, you may not need a business plan. But when your cash flow is not really demonstrated in those, as far as those tax returns, then you need to explain why you will be able to cash flow it. So projections are going to be a very important part of the business plan. So I would say, I would highly recommend that you have a business plan. The lender will ask whether they're going to want to see it. My also recommendation is to prepare 2 sets of business plans. One that's going to be very detailed. Another one that's somewhat of a summary. So this way the lender has a chance to take a look at it and let them know that you have more details available if needed, if they request some more details on their business plan. Projections. And projections are something that are really an important part of the business plan, and they need to be realistic. So I recommend that they be well supported, that you use the industry standards for your particular industry as far as for the margins. So take a look as far as your projections and start from as far as the sales, making sure that they're explained and well supported, as well as far as going down to your operating expenses and your cost of goods cost of goods sold. Make sure all of that is basically margins that are related to or close to as far as what your industry dictates they are. And you can use as far as different tools such as RMA to help support that. When you do your projections, I recommend not only doing 1 set of those projections, but 3 sets. Your most likely case scenario, your worst case scenario, and your best case scenario. This shows as far as management's capability to the lender, that you are well prepared for any one of those scenarios, and make sure that you can, again, support each one of those as far as scenarios. I'll stop there.
Thank you. For each panelist, do you help with credit repair? We know that credit scores play an important role when applying for a loan. Mary, let's start with you.
So we are different from other lenders. We do not use credit scores, and we do not put liens on personal assets. And instead, we evaluate how well our borrowers have managed their debts over just the last 2 years. If a client is currently in bankruptcy, then that is probably the only client that we would not be able to offer a loan offer. But because we are very different and our loans start as low as $500 up to $100,000 with startup and established businesses in the states of Illinois and Indiana, over 90% of all of our clients will get a loan offer. All of our loans have a personal guarantee, and we report them on their credit bureau. So we have a loan product. If you're not eligible for a loan over $2,500, what we call is a credit builder loan. That is a loan where somebody may have some damage to their credit. But again, we do not look at a credit score, and we only look at your most recent activity. And the credit builder loan is under $2,500 with a repayment of 12 months. We also, through our financial literacy program in-house through our business coaching, we provide credit expertise and how to help you rebuild your credit. Another thing we also offer is what we call a coaching credit loan. So if you are not eligible for a loan, or let's just say you go to our coaching team, you can, as a startup business or as an eligible existing business, you can complete 11 coaching activities. We will offer you the $2,500 loan, and that loan will be used to repair your credit. So we report to all the 3 credit major credit bureaus. And again, for us, we want to just make sure that our clients have the ability to build their credit and get, whether it's working capital or equipment loans, to provide alternatives to their lending needs.
Thank you.
Sure.
Kimberly?
Yeah. And so, Summer Core, we don't offer any credit remediation things, but I can provide some tips that if you are in a place where perhaps your credit is not in the best place, but you are still looking to access financing, some tips to maybe when you're actually talking with lenders. And this could be either for credit history issues or other non-financial red flags. What I mean by that could be something like maybe there was a lawsuit in your past or something to that effect, where it's not necessarily going to show up on your credit score. The thing I would let you know is to be upfront with your lender, because regardless of, they're going to find out eventually if they're doing their due diligence in deciding whether or not to lend to you. It's always best to be upfront and to complete, to be fully inform the lender that you're speaking with. If you do have previous delinquent debt, it's great. If you already come prepared with a payment plan and proof of either like auto payment, something to that effect, show that you're actively working on paying those debts down. That's also a big plus. And I would also say, make sure that when you're going in to talk with the lender, is that you know what your credit score is, and definitely check it out on any of the bureau scores, because sometimes mistakes happen. And so if you need to be able to be prepared and say, hey, I know it says this, but this is the reason why. The other thing I would suggest is if you need help in this area, obviously working with an organization like Allies is a great bet. Additionally, making sure if you are a little bit more of an established business, work with your professionals, your core team to help you. If you have a lawyer, an accountant, et cetera, to just make sure you have all your documents in order and you're on track.
I just want to add that as far as, first of all, great tips from Kim and great programs from Allies, from Mary. Those are great tools to use to try to help as far as if there's a credit background. It is very important. Lenders look at it as far as the credit background, the way we look at it, the way lenders look at it. If you're not paying everybody else, I don't think we're going to get paid. So it is very important to take care of that issue, bring it up front to the lender so they can be reviewed. Some people take it as far as credit issues are a lot worse than they really think they are first of all, or the opposite, they're not as bad. So let the lender take a look at it and review it, and they can give you as far as some guidance on there. The other guidance I like to give is when there is a problem with the credit background for either an individual or the business, is to talk to one of our resource partners. Our resource partners, again, are small business development centers or SCORE, and they do have, as far as a little bit of coaching, what can be done to help a little bit of the credit background. Pat, I don't know if you have some additional comments, anything else to add on to it?
No, not really. I think everybody covered it pretty well. I would only add, as Kimberly said, try to stay ahead of the game when you're approaching a lender and understand what your situation is and be upfront about it. And if you get in trouble and things happen during the course of a business's life or a person's life, keep an open dialogue. Don't dodge creditors. That's the worst thing they can do. Keep a dialogue, because sometimes that has an impact on how what kind of program you can put up and how it may impact your credit score. But other than that, that's me.
Thank you. As we wrap up for each panelist, what is the common mistake business owners and entrepreneurs make with their finances, and what is your advice for them? Let's start with Kim.
A common mistake. I think too, a common mistake actually is that business owners don't actually know what their finances are. And what I mean by that is they have a bookkeeper or an accountant or somebody else that is really keeping track. And while, maybe the business owner is working on other elements of the business, it totally makes sense. As entrepreneurs, you wear a lot of hats. However, when it comes time to make really key decisions, whether about big purchases or trying to borrow and access capital, if you are not understanding what your numbers are, it's really hard to be able then to understand what your needs are and also what your capacity is to borrow. So I certainly encourage you to use experts that can do some of the day-to-day tracking for you, but there should always be a regular communication and you being able to understand your top line numbers at any given time.
Agree with Kim. Especially as far as when you start looking as far as what's really needed for a startup business, as far as partnerships with. And I usually recommend that they have an attorney, a good banker, and most importantly, an accountant. So this way they'll understand their financial position. To me, the most common problem that I see with small businesses, what they have regarding financial situations, is doing their projections, not having it really adequately supported. So that's something that's really important to do. We see overly optimistic projections over and over where they're going to make $1 million, or they don't realize that they're looking for a certain dollar amount for a loan and not realizing that the cash flow isn't sufficient to cover that loan. So understanding their numbers, again, going back to maybe an accountant, is very important for a small business owner to have to understand the numbers, as Kimberly said. And Patrick actually is a CPA, so maybe he might be able to chime in a little bit more regarding those type of tips.
Well,
I'm sorry. Go ahead, Patrick.
Well, as a lender, a commercial lender, the macro mistake that I saw many times was, as someone else already pointed out, an entrepreneur not really understanding why they want to borrow and how they're going to pay it back. And that involves a lot of different things, including the projections and And understanding your numbers is, as I believe Kimberly said, if you get tripped up in a conversation with a commercial lender about why you want the money and how it's going to benefit the business, you've just made a grave mistake. Most lenders, when they've been around the block for a while, are always trying to protect borrowers from themselves. I've seen a lot of situations where there's a sale on something that I could sell, so I'm going to buy a lot of inventory at a good price, and all of a sudden they can't sell it and they can't turn it around. So their projections weren't accurate in terms of how they can unload all this stuff they're buying. So it's really some fundamental things about, again, why do I need it? How's it going to benefit the business? How am I going to pay it back? And that entails a lot of different things, but that's the way a commercial lender is going to think about it.
And I was going to add, one of the things that we see is a lot of our small business owners, they commingle their personal and their business funds, which is something we ask them not to do. Always have business bank accounts and keep your business and your personal funds separate. Make sure you are registered as a business owner and as a legitimate business, because we see a lot of soap props that are just using their personal account, and therefore it's hard for them to really understand their, return on investments on the products that they sell. They're not sure of their net income for the end of the year. One of the things we also see is lots of our clients, they will apply for 100,000 because our loan limit is our 100,000, but they're not really sure what they need the funds for. So don't overextend yourself as a business owner, and understand the differences between what type of loan you're looking at. There's lots of free services that are out there, and it's really important that you utilize those free services. Again, I'm going to offer, we have 10 dedicated lenders here at Allies. So if you apply for a loan, you will be assigned to a dedicated lender. And we also have our free business coaching program with 4 dedicated free business coaches. Lastly, there's some great fintech lenders out there. And yes, you can get a $50,000 loan in probably 30 seconds. However, look at the contract, review what the repayments are, look at the APRs. I've seen merchant cash advance where it's 60, 80% APR, and a business owner will never be able to repay that because all you're doing is paying interest over time. So it's really important that you take your time, review what you are exploring so that you are not into a situation where you cannot get yourself out of it.
Thank you so much. Do you guys have time to take questions? We have a few questions.
Sure, happy to stick around.
Give me 1 second. I'm interested in a coaching credit loan. Please reach out to me.
So I added a link. I think that was to Allies. I added a link to the chat, but if you go to a4cb.org, and on the top right-hand side, you will see connect with a coach. It will take you to a4cb.loanwell.com. That's LOANWELL.com. Loanwell is just our platform to meet with a coach. And then you make an appointment. It's all done virtually. Again, we do offer office hours here at the hatchery on Tuesdays, Wednesdays, and Thursdays, but it's just a simple link. You provide a little bit of information, and then that business coach will be able to get you started on completing the 11 activities to then get offered the $2,500 for the coaching credit loan to help rebuild and increase your credit score.
Next question. I have a business plan that's very detailed, but members of the PTACS wants me to submit a one-page business plan. Can someone assist me to locate a veteran business outreach center in the Chicago area?
I could probably answer that. We have, through our partnerships, I keep talking about our coaching program, but I would connect with one of our coaching teams, and that we do work with the, and I'll put it in the chat, but there are veteran associations that we partner with to be able, somebody put on here, Ingrid, thank you, Veteran Leadership Council, and there are other veteran associations that, again, I will put in the chat for assistance to any kind of business programs.
Does any of the panelists have office hours for in-person instruction?
Well, the Small Business Administration currently is by appointment only. We don't have walk-in staff at our new office at 332 South Michigan, but if you can reach out and set up an appointment, many times we refer people to the Small Business Development Center nearest them, because they can assist things with things like veteran outreach as well. But you need to establish a contact with Bob or I if you're looking to come in and talk about financing.
In addition to, I wanted to go back to the question regarding veteran assistance. As I mentioned, we have our resource partners, our Small Business Development Centers, SCORE. We also have a Veterans Business Outreach Centers. And unfortunately, the closest one, the representative, I believe, is in Wisconsin. But as Patrick was just talking, we do remote as far as counseling. I would reach out to the VBOC, the Veterans Business Outreach Centers. You can get that information from our SBA website and just click on local resources and put your zip code in there, and you can select that you're looking for a Veteran Business Outreach Center, and then you'll be able to be connected with that particular counseling service.
We offer in-person walk-in office hours Tuesday, Wednesday, and Thursday from 10 a.m. to 3 p.m. There is a lender there every day. Our office is at 135 North Kedzie. That's on the corner of Kedzie and Lake, right by the Green Line. And we also have secure parking adjacent if you're interested for that method. But yes, you can just walk in Tuesday, Wednesday, and Thursday, 10 a.m. to 3 p.m. at 135 North Kedzie.
Is there funding or grants for a real estate venture? I would like to purchase a building for rental income.
So I can talk a little bit about that. You know, unfortunately, the programs that SummerCore offers, which is going to be the 504 loan, as well as the SPIF and NOF grants, they're really all about owner-occupied commercial, in some cases, industrial real estate. So unfortunately, for like flipping or investment properties, that's not something that we offer. But I would check out to see what else other programs are available on the City of Chicago website when it comes to either housing funding potentially available, or also maybe the Chicago the loan bank. Those are also some other options that maybe be able to help you in accessing some financing, or at least lower cost real estate to be able to talk about this project you're envisioning.
Thank you. One more question. My credit is excellent, but I don't have any business credit. What do you recommend to establish business credit?
Probably a line of credit. The reason why I say line of credit is probably the least expensive as far as loans you can acquire. You're only going to be charged of the interest that you have as far as it's being drawn on. So if you're able to qualify for a line of credit, if you're an existing business, then you can set it up and draw on it as needed when you do need it. And it's used for as far as your short-term needs, such as far as working capital needs or smaller equipment needs. But again, I would say a line of credit might be a good loan that you may want to take out because it's expense-wise to start off with.
Thank you to each of our panelists for sharing your expertise. For all of our attendees, please reach out to them and their organizations for financial support and resources. And for all of our Panelists, can you please put your emails in the chat one more time? I know that you have done this already. And yes, this webinar, this expo is being recorded and will be available on our YouTube page at youtube.com/Chicago BACP.